Hello everyone and welcome to the latest instalment of the ADM Agriculture YouTube series. My name is Oli Norris and I'm the bean trader for ADM Agriculture here in the UK. This week we're going to take a look at what is driving the bean markets both back here at home and also on the international stage, as well as some thoughts on where we think pricing will go in the new year. Over the last month or so, we've seen beans appreciate roughly £5 per tonne on an ex-farm basis here in the UK. A couple of things have helped support this. Firstly, we're seeing limited interest coming through for export demand, with pricing holding relatively firm as a result. This is despite offers coming through from the Baltics. Quality in the Baltic states has been questionable, but we have seen a limited flow of human consumption grade exports from this origin despite this. Although Australian new crop will likely take over as availability comes online, probably for shipment towards the end of the January window. To see a big swing towards the UK as an export origin, we need to see beans come down around €10 per metric tonne to be truly competitive and more vessels loaded. However, I'm sure a number of you will have loaded beans for us already this season that we have then subsequently exported ourselves over the recent weeks, and this has been against historic sales when the UK was more competitive as an export origin. The Australian harvest continues to have a stop-start nature, with rains regularly stopping play. However, we are not forecasting any big quality issues at this stage, aside from some light staining, with human consumption pass rates expected to remain good. We're still estimating a final production figure of somewhere in the region of 600,000 to 700,000 tonnes. Expect these beans to start competing with the UK for late January shipment onwards. We've also seen a small increase in domestic consumer demand on the nearby. In part, this has been helped by other mid-proteins, such as rapeseed meal and sunflower meal, seeing less nearby availability than normal. Whilst, as I'm sure you've all noticed, the weather has been wet and cold, meaning that livestock feeding rates are going up. This has helped keep volumes moving despite the reduced export campaign, although questions remain around whether we will see the continued increase in inclusion rates as we see an increase in availability amongst the other proteins again. To illustrate this, the graphic on the screen shows the relative value of a number of different proteins that are available to the UK feed industry, including beans. Put simply, if the bar is below the line, it looks cheap. If the bar is above the line, it looks expensive. Whilst this isn't an absolute guide, it does unfortunately show a continued trend of feed beans being uncompetitive compared to the other protein sources out there. There are other reasons you would feed beans beyond this than just their protein content. However, basis the current values, we would expect to see consumers switching away from them through the February through to April slot. The chart that is now on the screen is showing a hybrid value for beans, which also takes into account their energy value, as well as their protein content within the feed ration. To put this into some perspective around what this means for UK cash values, there is an argument that beans need to become around £20 per tonne cheaper to really fight back and gain more of a share of the ration in the March and April 24 slots, and even more as we approach harvest. Whilst we don't think we will see such an aggressive pullback in the market as the current chart is suggesting, both markers that we have shown are signalling that we will likely see a pullback in values at some point in the first quarter of 2024. Beans will still have a place in the ration for sure. However, unless we see them start to slide lower in pricing, it is likely that we'll start to ration out of the diet. One final point for today is the results of the AHDB Early Bird Survey, which was released earlier this month on the 14th of November. Whilst mainly grain and oilseed focused, it did note an expectation for the overall pulse area to decline approximately 10% year on year, a loss of around 20,000 hectares or 60,000 tonnes of beans from the S&D. It is worth noting, though, that the cut-off for the survey was prior to all of the recent bad weather that we've had, and so it is likely we'll see the pulse area remaining the same or maybe even increase year on year as a result, especially where spring pulse seed has better availability than most other crops. So, to summarise, bean pricing is likely to remain supported until Christmas now. However, expect it to start sliding lower in the new year. As such, if you have any beans to sell, now could be a good opportunity to talk to your ADM rep and secure these firmer values we currently see. We have a number of homes available around the UK and are buyers all the way through until harvest, so please do not hesitate to call your rep and they will be more than happy to help. Thank you for watching, stay safe out there and have a good week. Goodbye.